Time now for Options Insight. I'm Abigail Doolittle. Joining me from the CBOE in Chicago is Scott Bauer, Prospect Trading Academy. Scott, thanks for taking the time. And wow, what a difference a week makes. We spoke a week ago. There seemed to be no floor for stocks. Now we have this amazing two-day rally for the S&P 500, the best 2 days since after the Brexit. That's the degree of the buying power. But is it real or a dead cat bounce?
You know, I don't think it's a dead cat bounce, but I'm not convinced just quite yet. Now, we do see VIX down 11% today, which is a big number, but it's still trading in the 20 handle, Abigail, and that still concerns me. That being said, we still have so much headline risk, geopolitical risk coming up, especially, the midterms, the Iranian sanctions. So it still, scares me a little bit that we see VIX up where it is. But if we can get this, get like this in about a week or two from now, then I'd say that we have come a long way and we probably had hit bottom.
So are you watching that 200-day moving average? And also, how do you feel about the range earlier this year? Because we had that steep decline and then we just whipsawed for quite a while in a range between roughly 2,600 and 2,800. Is that what you think could possibly be ahead if you don't think it's a dead cat bounce?
I do. I absolutely do. And to really take a look back and say that was the bottom, you don't necessarily want to see these huge, massive moves like this. You want to see something more sustained, a little bit more grinding it out, but this is a good start.
Very interesting. Yeah, the analogy of the stairs and the elevator coming to mind. Investors certainly taking the elevator up today. You really don't generally see that. Let's talk about your trade. You're bullish on CF Industries.
I am, and everybody's focused on Apple, but I really like CF, and that even before there was an analyst upgrade this morning, this stock bounced nicely right off the 200-day moving average. Earnings, coming in tomorrow morning. What I really like here is the upside. The option market's pricing in about a $4.50 move or so. So I'm targeting November 16th options, the 50-52.5 call spread. If I can buy that for about for about 70 cents or so, my reward to risk is fantastic. Spread can move to $2.50. That's $1.80 to my 70-cent risk, which is all I can lose what I pay for that spread. I really like the momentum here. I think they're going to be reporting really good numbers. But as we know, much of what we see from these companies all really hinges upon the guidance and what they talk about in their conference call.
Well, Scott Bauer out at the CBOE in Chicago, thank you so much for joining with your CF Industries bullish trade and your market views. Thank you so much.